Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Bloomberg has learned the US Justice Department is looking to force Google to sell off its Chrome browser in what would be an historic crackdown on one of the world's biggest tech companies. Donald Trump's team is said to consider pairing former Fed official Kevin Warsh in the Treasury role alongside hedge fund manager Scott Bessent at the National Economic Council. And 45 democracy activists in Hong Kong are imprisoned for up to 10 years under a China-imposed security law. The US calls the trial politically motivated. Happy Monday, everyone. You can sense a semblance of modest relief in these markets with a slightly softer US dollar and yields that fell around 3 basis points on the 10-year yesterday, giving some breathing room to equities. It's been a solid session over in Asia broadly. European futures pointing to gains of 0.3% after flatlining yesterday. You saw some gains coming through overnight in the US. By the end of the close, the Nasdaq was up. That was propelled by the likes of Tesla, gaining around 5% in the session. FTSE 100 futures currently pointing to gains of 0.4%. When it comes to the US, then S&P E-minis just up 0.1% in positive territory. Nasdaq futures on the 100 looking to build on the gains of around 0.7% yesterday, pointing higher by just shy of 0.2 as things stand. Let's flip the board and look cross-asset then, because again, part of the relief is down to what's happening in the Treasury market, with some money moving back into US Treasuries yesterday, with yields edging slightly lower. 440 right now on the 10-year. Bear in mind that you crossed 450 earlier, of course, on Friday. You're 440 now, so a little bit more comfort level for some in the markets. Euro dollar at 105, a little softer on the single currency, down 0.1%. Bitcoin continues to be in focus, still near those record highs once again tying into some of the machinations around the incoming Trump administration. 91,787 right now on the main cryptocurrency. And Brent, $73 a barrel, currently up 0.2% after some pressure that saw yesterday across the oil space. And we keep an eye on that given the tensions within the Middle East, of course. So that's your look cross-asset. Let's cross over right now to Singapore. Avril Hong standing by for a check on the Asian markets. Avril.
Yeah, Tom, we're seeing Asia stocks higher today, catching that U.S. tailwind thanks to lower U.S. yields and the greenback softness. And we're seeing the TAIEX actually outperforming 1.3% higher by the close. But note here that overall in Asia stocks, it was coming off a really bad week. Those steep losses just a week ago. What is really underperforming today for another session is the mainland stocks, CSI 300, declining for the fourth session. It's those concerns about domestic growth and whether Chinese authorities will front-load enough stimulus next year in order to kind of buffer from Trump's tariffs. Traders don't seem terribly confident. We also have some of these brokerage chiefs such as Morgan Stanley, Goldman Sachs, their CEOs talking about the need for greater transparency, the easier movement of capital to kind of restore investor confidence. Flip the board, because some of those similar rules apply to when you're looking at the trading drivers for the currency. And today we're seeing the renminbi looking soft on a day where most of Asia currencies are climbing against the greenback, and traders seem to be quite okay with hanging on to their yuan short positions. Today, the yen is reversing some of the weakness from a day ago, getting a bit of a boost from the Japanese finance chief, who spoke about how they don't want to see these sharp moves in FX. Of course, just a day ago, Ueda was of no help to the yen, not giving clear signals about the December potential rate hike. Flip the board and take a closer look at this chart, which will show you, with this courtesy of MLive's Mark Cranfield, how on dollar yen there seems to be a clear path towards 160 for aggressive traders at least. They are seeing that climb higher potentially. That trajectory is there. You think about how in Japan the domestic political backdrop is very tricky for the DOJ in terms of future rate hikes, but also think about the path of the greenback, how it's an environment it's difficult to see that the dollar doesn't climb into much of next year, given what is expected from the Federal Reserve, but also concerns surrounding the deficit and Treasury supply. Tom.
Avril, thank you very much indeed. 160, possibly the path higher for dollar yen. We continue to focus on that. Some other calls, of course, suggesting that the yen could go higher, so a debate remains, and the DOJ will be centred to that. Some lines crossing right now from Nestle. The stock, by the way, is down a little over 15% year to date. Here's the redhead, though. Nestle seeing medium-term organic growth at 4% plus. So Nestle seeing medium-term organic growth at 4% plus. Of course, the maker of the Kit Kat bar and coffee capsules, a central touch point on the health of the global consumer. They see medium-term organic growth of 4% plus and underlying trading operation profit margins of 17% plus. Let's get back to US politics and how that is all playing out in these markets then, because Bloomberg understands that Donald Trump's team is considering pairing former Fed Governor Kevin Warsh in the Treasury Secretary role with Scott Bessent as director of the White House's National Economic Council. Let's bring in Bloomberg's Valerie Teitel, who's got the details on this. Valerie, what do we know then as we continue to wait with bated breath as to the potential appointment of the next Treasury Secretary of the U.S.?
Well, sources are telling Bloomberg that Lutnick is out of the race for Treasury Secretary. And what we have heard more recently is that Kevin Warsh is favored for the Treasury Secretary position, and Scott Bessent will be moved over to the National Economic Council. Now, the National Economic Council is still an influential seat, maybe not as influential as the Treasury Secretary. It's currently that position is taken by Lael Brainard, who was the dove on the Fed, who left the Fed during their aggressive rate hiking cycle to go work more closely with the Biden administration. But who is this Kevin Warsh? He is a former Fed governor. He was also rumored to be picked for the Fed chair in 2017, but Trump was swayed by his then Treasury Secretary to go for Powell instead, a move that he has said that he now regrets. Perhaps Kevin Warsh could be maybe warmed up to being Fed Chair Powell's replacement in 2006. But what we have heard from him recently is he's been out very critical of the Fed's 50 basis point cut back in December, saying they might have declared victory on inflation too early. But Tom, a lot of questions still remain on how tough Kevin Warsh will be on tariffs. Back in 2011, he wrote an op-ed with Jeb Bush in the Wall Street Journal talking about warning against protectionism measures. So perhaps maybe not as tough on tariffs, or at least he wasn't back in 2011, but maybe he'll be swayed now under Trump's new administration.
Yeah, let's see if he tacks more on tariffs towards the Trump view on that. Important context, Valerie. Give us the market interpretation of what's unfolding on this point. How much of a focus is this for markets right now?
Look, Tom, it is a big focus for the market moving forward in the bigger picture. But we've been driven by some different elements when it comes to the price action in the Treasury market. Again, we're seeing very strong dip buying in the Treasury market. Yesterday, we had the 30-year yield hit the highest it's seen since the end of May and very aggressively rallied off of that. And we saw some big blocks traded in the futures market, showing again the second day in a row now that we've seen some big dip buying when it comes to the Treasury market when yields move higher. We've also seen dip buying in gold. And this is a good thing to note, Tom, because the dollar rally has taken off some steam, and it's allowed gold to bounce from the recent lows, nearly 2.5%. Now, gold since the election, Tom, has slid near 8%. A lot of that to do with the dollar strength, with the rise in yields denting gold's recent all-time highs. The other thing I want to mention is we did also see a reversal in the equity market yesterday. Nasdaq in specifically ended its 5-day losing streak. Now has taken that losing streak in the last two sessions off the table. We have heard some big equity calls from Morgan Stanley's Mike Wilson and from Goldman Sachs, all talking about upside for the equity market when it comes to 2025. Both Goldman Sachs and Morgan Stanley have their price target on the S&P 500 at 65,000 for year-end 2025.
Valerie Teitel, thank you very much indeed. Now to a major corporate story unfolding for us and some Bloomberg reporting around Alphabet. Shares lower in after-hours trade. That's after Bloomberg reported that the Department of Justice is set to push Google to sell its Chrome browser to break up its search monopoly. Let's get the details and bring in Bloomberg's opening trade anchor, Kriti Gupta. Kriti, what do we know?
We know that this could become one of history's biggest antitrust cases, a title that's currently held by Microsoft in the late 90s at the moment. What's crucial here is that the Justice Department has decided to ask Amit Mehta, who's the judge who earlier this year had ruled that Google illegally monopolized the search market. So some pretty strong evidence, a pretty strong case to begin with. But I think what's changing is how do you remedy it? And that's where this issue comes up, that they may actually be able to peel off Chrome. Here's why this is so important when it comes to the Google and the Alphabet broadly kind of licensing. Chrome is the largest internet browser in the world. 61% of traffic goes to Google Chrome, and it is competing with the likes of, for example, Safari, Internet Explorer, Mozilla Firefox. But this is really the main way that Google is able to not only detect who is searching what, but also collect that data and then give them targeted ads. That is the crux of the case that Amit Mehta had ruled upon back in August. The concern here is what this may actually do in terms of breaking up Google, given that so much of their ad revenue comes as a function of this one platform, given that vertical integration. That is the concern here. We'll see if that actually comes through. Right now, it is just a recommendation to the judge from the DOJ when it comes to actually pulling back on things like data licensing and potentially doing Chrome. It is not for sure. It is just a recommendation. That being said, some pretty strong words coming from the Google kind of VP as well. Take a listen to what she had to say. Quote, the DOJ is continuing to push a radical agenda that goes far beyond the legal issues in this case. More fighting words here. The government putting its thumb on the scale in the ways that would harm consumers, developers, and American technological leadership at precisely the moment it's needed the most. Tom, this is crucial timing. We know, but being tough on tech has been a bipartisan issue for both Democrats and Republicans. We'll see if that eases under a new administration.
Yeah, initiated under former President Trump, and now, of course, he's coming back in. So, as you say, we'll see whether or not this progresses, and the time frame is looking at April and then August in terms of when this potentially wraps up, 2025. Bloomberg's opening trade anchor, Kriti Gupta, thank you very much indeed on the importance, of course, of the Alphabet and Google story crossing in the last few hours. Here's what else to be thinking about for the day ahead then. 10 a.m. UK time, Euro area CPI, so inflation data out of the Euro area, to what extent it ties into expectations around the ECB, fully expected by market participants to continue, of course, to cut into 2025, and expectations you get back below 2% on the benchmark rate from the ECB by around the second half of next year. That inflation data out later today. We'll break that for you. At 12 p.m. UK time, a touch on the US consumer then with Walmart earnings. We'll break those as well for you, given the size and scope of that business and the touch point across the US consumer, consequential. And at 1:30 p.m. time, we're going to get Canadian CPI as well. So the inflation trajectory out of the US's northern neighbour. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go for some of those top stories. As you can see, we are leading on that Google and Alphabet story. Coming up later, we're going to be joined by Rick McConnell, CEO of tech firm Dynatrace. We're going to be talking AI, automation and more. That's at 6:30 a.m. UK time. And coming up, Hong Kong sentences 45 pro-democracy protesters to jail time, including a 10-year term for a prominent activist. More details on that next. This is Bloomberg.
I'm very pleased that my Foreign Secretary and Foreign Minister Wang met recently and discussed respective concerns, including human rights and parliamentary sanctions, Taiwan, South China Sea, and our shared interest in Hong Kong. We are concerned by reports of Jimmy Lai's deterioration health in prison.
UK Prime Minister Keir Starmer confronting the Chinese president on human rights issues with a reference to jailed Hong Kong pro-democracy activist Jimmy Lai. Meanwhile, a Hong Kong court has sentenced former democracy advocates and advocate Benny Tai to 10 years in prison. It's the longest sentence ever meted out using a China-imposed security law. Bloomberg's China correspondent Min Min Lo joins us now from outside the West Kowloon Magistrates Court. Min Min, give us the details then of these sentences.
Yeah, it's really a rainy, dreary, windy day this morning, but really not deterring many of the supporters from coming out bright and early, pretty much wrapping around this court building as they awaited that sentencing. And it was an emotional day for some of them. Benny Tai, who is deemed as the principal organizer of this 2020 unofficial primary election that a court deemed as an attempt to undermine the city government, he is sentenced to 10 years in prison, the longest sentence handed out so far, but it is at the lower end of the sentencing guideline because the maximum penalty is life in prison for someone who is deemed a principal offender. And another name that you might recognize is Joshua Wong. He is the face of the 2014 Umbrella Movement. He is a former student leader. He's sentenced to 4.6 years in jail for being an active participant of that unofficial primary. The median jail term for these 45 activists is 59 months, and it includes the term that they have already served while being denied bail because most of them had already been in prison for about 1,000 days by this time. And of course, it's being closely watched by the citizens of Hong Kong and by the international community as well, because not only are the defendants denied bail, they were denied a jury trial. They were trialed by 3 judges handpicked by the chief executive, John Lee, and that has drawn criticism from the international community who are questioning the impartiality of the judges, although the chief executive in Hong Kong had said there's no question around whether the judges are impartial or not.
Right, yeah, my understanding is the judges have been handpicked, haven't they, by Beijing-backed executives and leaders in Hong Kong. What does this tell us then, Min Min, briefly, about Hong Kong, China, and how the US may respond?
Yeah, well, Beijing has for a long time been saying that a national security law is essential to maintain stability in the city, and it has been urging other countries not to meddle in its internal affairs. And just on Monday, at the sidelines of the G20 summit, we know that the British Prime Minister had met with President Xi and raised the issue of China's human rights records. He was barely able to register his concern before the British press were abruptly moved out of the room, and that just underscores how sensitive this issue is to China. We know the US, for example, has previously said that these trials are politically motivated. They have been calling for the defendants to be released. And so it's being closely watched also by the business community here, because that rule of law, the openness of the city, the independence of the judiciary, these are factors that for a long time been important pillars that underpin Hong Kong's status as a global financial hub. And this comes at a time when Hong Kong is trying to attract more foreign investments into the city as well.
Bloomberg's Min Min Loh, thank you very much indeed on that important story evolving in Hong Kong. There's plenty more coming up. We're going to hear from the CEO of Standard Chartered, his views on the investability of China. That's coming up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Tuesday. Standard Chartered CEO Bill Winters says Chinese markets are beginning to improve. He spoke exclusively with Bloomberg from the sidelines of the Hong Kong Monetary Authority's Global Financial Leaders Investment Summit.
Last year was, I would say, the reestablishment of Hong Kong as a real business destination and hub. This year, I think we're slightly celebratory because Hong Kong's actually doing quite well. Signs of recovery. The Chinese market is excuse me.
No worries. Yeah.
Chinese market is beginning to improve. Obviously, seeing significant improvement in equity markets. Sentiment shifting. We're far from done. We know that, but but I would say now it's about really getting back to business and getting back to growth in Hong Kong and China.
I think the first panel of the day, and we have a fantastic lineup there. I think you have the CSRC, you have the who's who effectively of Chinese officials there. Do you think they've managed to put a floor underneath both the market, the economy, and sentiment? I mean, those three can be separate things.
I think there's been good progress on all fronts. So I think the monetary stimulus, one obviously was stimulating the economy, but also put a little bit of a floor under the property price disaster. It's been a really bad recession in property prices, and we haven't recovered yet. And there are some nascent signs of recovery, but basically, I think they put a floor under it, and it was a clear statement. We're not going to let this thing get out of control. The recent local government debt swap, I think, took another issue off the table, which was the local government finances, which we know that a lot of those governments were financed by land sales, which have gone to something close to zero given the property market. So just stabilizing that takes a big question off the table as well. There's suggestions that there will be further fiscal stimulus to get the economy going. And but we all know that confidence is still quite low. Consumer confidence is low. International investor confidence is low. There's also some geopolitical stuff going on there. But local and entrepreneur and business confidence for investment is low as well. So you probably need one further jolt to get that engine.
What do you think that would be?
most likely fiscal stimulus. There could be a little bit more monetary. There could be a little bit more sort of directed social financing for small businesses, things like that.
Okay.
So I think we'll see those kind of programs. But we all know that China is full of animal spirits, and that the animal spirits were squelched for the past few years, given all the challenges that China has experienced. We got to get those animal spirits going again. I can tell you, I'm beginning to feel that in Hong Kong in a more material way. But China's obviously a much bigger place. It's a tougher ship to turn.
Yeah, I mean, we've been here, I think, the past 3 years as well, and I can tell that the vibe and the energy is different this time around. The guest lineup, the location is slightly bigger as well. One last question on China. You put the banking hat on for me. Do you think it's a good idea to bring all that debt back onto the formal balance sheets, whether that's the banking system or the central government?
Yeah, I do. I think there was a big overhang for two reasons. One, it was unsustainable at a local level. So the alternative was some kind of default or perennial forced restructuring, which is never builds confidence.
Right.
And second, it wasn't very transparent. So we didn't know exactly how much there was and where it was. I think this just takes one big question off the table. Of course, there are lessons to be learned about financing local operations through property sales or property transactions. But this also frees up the local currency, the local government balance sheets for the kind of stimulus program that could come next.
Right.
A lot of the implementation of any stimulus is going to happen locally.
Right.
It's not going to come from the central government. Now these balance sheets are freed up to really get the economy going again.
And it's the sense you're getting to that officials have taken into bigger consideration the private sector and what the market and how the market actually feels about what they're doing.
I think the representation we're seeing here at this forum today, and at similar fora that I've been to in China this year, the government is all in terms of re-engaging the private sector in the most fundamental way. It takes time. These sort of confidence rebuilding things. We've been through it in whether it's the US or Europe or Korea or Japan. We've been through these transitions many times, and fortunately for me in my life, many times. In almost every case, it takes longer to get going, and then it happens faster than you thought.
Okay.
But I think we're in the get-going phase right now.
Bill Winters, CEO at Standard Chartered, talking to David Ingles there in Hong Kong. Staying in the region, financial leaders have gathered in that city for the Global Financial Leaders Investment Summit. China's Vice Premier and the central bank's Deputy Governor welcome delegates to the city.
We are happy to see that Hong Kong has made new achievements in economic and social development. In the first 3 quarters of this year, Hong Kong has scored an economic growth of 2.6% year-on-year and a positive growth in a row of 7 quarters. Prices remain stable, unemployment rate is high. People of Hong Kong are happy. Society is harmonious and prosperous. Hong Kong is proceeding steadily towards stability and prosperity.
With so many investors here, financial leaders, you're welcome to visit the mainland. Talk to us. We stand ready to provide easier access so that you can achieve great returns in the mainland.
OK, that event happening, of course, as the far from independent judiciary in Hong Kong hands down lengthy sentences to 45 individuals involved in running elections, unofficial elections, and calling for greater democracy in that city as a result of the national security law. Those sentences being handed out. Let's check in right now in the markets then. Broadly, you're seeing optimism across Asian markets. Across the MSCI's Pacific, gains of almost 1% right now. The handoff from the US was beneficial. CSI 300 over in China, the mainland index gaining 0.4%, of course. Over in Hong Kong, the main index there, the HSI, up 0.6%. And Japanese stocks as well, gaining up 0.4%. Over in Taiwan, stocks are up 1.3%. There's plenty more coming up. I'm going to speak to the CEO of software company Dynatrace. I'm going to focus on AI. Stay with us. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Bloomberg learns that the US Justice Department is looking to force Google to sell off its Chrome browser in what would be an historic crackdown on one of the world's biggest tech companies. Donald Trump's team is said to consider pairing former Fed official Kevin Warsh in the Treasury Secretary role alongside hedge fund manager Scott Bessent at the National Economic Council. And 45 democracy activists in Hong Kong are imprisoned for up to 10 years under a China-imposed security law. The US calls the trial politically motivated. Let's check in on the markets right now. Asian stocks putting in a decent session. The handoff, of course, was brighter coming through from the US with the Nasdaq 100 up about 0.7% by the end of the close. The S&P also closing higher by 0.4%. European futures then pointing higher by 0.3% after essentially flatlining yesterday. FTSE 100 futures getting a bit of a lift from commodity prices that are up this morning, currently pointing to gains of 0.5%. S&P futures looking to build on the upside of yesterday, just up 0.1%. Nasdaq 100 futures also pointing higher by 0.2%. Let's flip the board. Cross asset, US yields in focus. The 10-year yield edged slightly lower, down about 3 basis points in the session yesterday. That gave some relief to some in the markets. 440 is what's being yielded on your benchmark 10-year right now. Euro dollar at 105. Bitcoin closing back into those record levels, nearly at 92,000 right now. And Brent, $73 a barrel. A little bit more calm in the oil markets after a big pop in prices yesterday. Currently up just shy of 0.2%. Now, German Chancellor Olaf Scholz has defended his decision not to give Ukraine Taurus long-range missiles. That's even as the US has decided to authorise Kyiv to use its weapons to strike inside Russia. Let's get more from Bloomberg's Oliver Crook standing by with the details. Ollie, Scholz is on the global stage, but also on the campaign trail, of course, heading towards those early 2025 elections. How is he positioning himself at the G20, and how does the Ukraine story tie in to his positioning?
Yeah, I think that the Ukraine story is sitting at the center of a number of things. I mean, you have Joe Biden, who's there in legacy mode. You have Olaf Scholz, who's there in sort of campaign mode. And at the center of both of these things, you find Ukraine. In the case of Biden, you know, it's come in those concessions in striking within the Kursk region, within Russia. This was seen as a sort of step forward for the Ukrainians. This is something they've been talking about for a very long time. It sort of falls short of the sort of blanket permissions to strike within Russia that they had liked. And for many people who had been watching this and watching what had happened throughout the entire war, which is what happens is often Biden will concede something and then Scholz will follow. This is not the case with the Taurus missiles. You have Olaf Scholz there saying basically that he will not consent to this. The Taurus missiles have even further range than a lot of the military gear that there is from the Americans right now. They can go up to more than 500 kilometers, saying that he's firmly convinced that it may that many citizens in Germany are worried about the security and peace within Europe. This is interesting for Scholz. This has been his conviction, not wanting to escalate things in Russia, but you cannot ignore the political dimension at home here for Olaf Scholz, where he has the sort of on the right CDU, Frederick Merz, saying that we should be delivering these things, but also fending off the AfD and the sort of far left, who are both sort of really wanting to withdraw support from Ukraine, potentially nodding a little bit to that. We should say, however, that Olaf Scholz has said that he will be supporting Ukraine till the very end, has given more support financially than any other nation within Europe, but you can see the politics playing out here maybe just a little bit.
Ollie, is this approach by Scholz, is it actually paying off?
So listen, I think that for many of these sort of politicians over the last couple of weeks, there hasn't been a huge amount that has cut through dynamically. I have not seen that really happening for Scholz here. What you see when you look at the polls, we have the Bloomberg poll of polls, which we'll keep updated for you guys throughout this very long campaign trail, we should say. But if you look at sort of what we're seeing from last week, broadly speaking, the sort of trends are in line, right? The CDU remains at the very top at about 32%. The AfD gaining a bit of ground there at almost 20%. When you see the shifts from what we've seen from last week to this week, there's nothing dramatic, but you see about a percentage shift away from many of the mainstream parties, away from the CDU, away from the SPD, away from the Greens, and towards the AfD and the sort of far left, Sarah Wagenknecht. What I think is interesting, Tom, is here for Scholz at the G20, what he is going to try to get forward is this long elusive trade deal with Latin America, the Mercosur deal, that of course is very non-popular for one of the neighbors, France, where you've had sort of farmers on the streets. Germany is in sort of desperate need of more export markets with the difficulties it's been having in China, and of course a Trump presidency potentially endangering the U.S. market. That is something that Scholz could deliver, though it seems fairly unlikely at this point.
OK, so we'll watch Mercosur as France grits its teeth, of course, and opposes, as you say. Bloomberg's Oliver Crook with the details on Olaf Scholz's positioning ahead of that election, of course, and how Ukraine ties into it. Ollie, thank you. On the ground for us, of course, in Berlin. Now to the tech space, particularly here in Europe. Funding for European AI startups, while still less than a quarter of the US total, hit a record high this year thanks to investments in newcomers building chatbots and self-driving cars, including companies like Wave, based here in London. According to a report from venture capital firm Atomico, AI firms in Europe raised $10.7 billion in the year to the end of September, driven by large financing rounds for France's Mistral and, as I mentioned, Wave Technologies. And as the world becomes increasingly reliant on some of these software applications, performance issues and outages are having far-reaching global impacts. They continue to be a risk, of course. Joining us now, very pleased to say, is Rick McConnell, CEO of Dynatrace, a software intelligence company specialising in AI-driven all-in-one monitoring solutions. That's the pitch, at least. Rick, thanks for joining us, I believe, from Hawaii. What's the outlook for your business? What are going to be the growth drivers as you look into 2025?
Well, AI is a huge growth driver in and of itself, but the biggest driver is simply the complexity of software. We all need software to execute our lives, and businesses need software to run their businesses. And it is getting more complicated to run and execute that software effectively than it has been in the past. And this is accelerated by the cloud, by AI, and by other trends. And at Dynatrace, we focus on enabling these organizations to deliver software that works consistently, perfectly, and we utilize multiple AI techniques to deliver that capability.
Yeah, and Rick, we referenced, we've had some examples, prominent examples, of course, this year, including the likes of the CrowdStrike outage that we saw, Snowflake, the data breaches there. To what extent do those stories lead customers to you? Are they a catalyst amongst corporations that are concerned about some of these risks? Does it drive customer flow to your business?
It does, and it is simply because the cost of these outages is extraordinary. And organizations all the way up to the board of directors, certainly to executive teams, they need to be managing these outages proactively to make sure that these outages don't occur wherever they can avoid them, and where they do, that they minimize impact. And Dynatrace facilitates doing that by, again, using AI capabilities and techniques to process billions of interconnected data points in a logical way, in an automated way, because it is simply impossible to do this manually in a cloud-based world. So it is this notion of automation and AI techniques built together that enables us to complete the operations that we complete for our customers.
Rick, as we think about the incoming Trump administration and potential new friction points or additional friction points potentially geopolitically between the US and some of its partners, how are you thinking about the resilience of US corporates to some of these cyber risks? What is the gap that needs to be closed at this point?
Well, there's always going to be cyber risk, especially with regard to nation states attacking organizations across the globe for monetary gain or strategic gain. And observability data, as we use it, logs, traces, metrics, real user data, are essentially the building blocks for us to deliver the capabilities that we do to be able to manage the combination of observability as well as application security techniques. And it is those two together that deliver such a powerful solution for our organization on behalf of our customers.
Rick, in terms of the global growth picture, growth is slowing. It's pretty decent, fine in the US. It's flatlining in Europe. It's pretty sluggish here in the UK. Are you seeing some of your clients cutting back on spend?
We haven't seen that, and one of the reasons is quite simply that observability is mandatory. We really do see it as critical. In the past, you would use a network operations center with lots of manual labor to try to manage outages, to try to manage resilience, drive availability, and essentially look for the needle in the haystack, that when something goes wrong, you need to find it as quickly as you can, and processing all of this data with enormous complexity manually is really very difficult. What you can do to essentially mitigate that is put in place the automated systems to enable you to replace that manual oversight. And the result of that is that AI-driven observability is moving to become more mandatory.
Rick, before we let you go, how are you implementing AI into your own business and creating efficiencies? What does it mean for headcount longer term?
Yeah, it's very interesting, but Dynatrace was essentially founded on the premise that observability should be automated. And so, as I mentioned earlier, we use multiple different AI techniques, causal AI, predictive AI, generative AI, all of which together facilitate the answers that we create from all this data. And so AI has been embedded in the fabric of Dynatrace really back to the beginning, certainly for well more than a decade, and we continue to use it to this day to deliver our business operations.
Okay, Rick McConnell, CEO of Dynatrace. Thank you very much indeed for taking the time and talking about the opportunities around AI and how you're implementing some of those solutions within the business itself as well. Some other stories making the news this Tuesday. British Airways passengers suffered delays following a systems outage at the airline's main operations centre in Heathrow that prevented communication with aircraft across the region. There was no immediate data available in terms of the number of delayed flights. The British Airways website was also down during the incident. The European Union's markets regulator is recommending shortening the time it takes to settle securities transactions from 2 days to 1. The change to the T+1 is proposed for late 2027, a move that would put the region back in step with the US. The US, Canada and others made the switch earlier this year. ECB President Christine Lagarde has urged Europe to pool its resources for shared priorities in areas like defence and the green transition. Lagarde says acting as a union can help raise productivity. Her call for greater integration comes as policymakers prepare for Donald Trump's return to the White House. Coming up, as markets position for Donald Trump's return to the White House, we're going to talk markets with Janet Murray from RBC Brewin Dolphin. Her views on how to position. Stay with us. That's next. This is Bloomberg. Welcome back. Stocks have climbed. Treasuries halted a sell-off that drove 10-year yields near 4.5%. That was by the end of play Friday, with traders keeping a close eye, of course, on news around President-elect Donald Trump's administration, primarily the incoming Treasury Secretary, who that will be. I'm joined now by Janet Murray, Market Analysis Head at RBC Brewin Dolphin. Janet, thanks for joining us. How important is that Treasury pick for you and the team in terms of how you think about the policy agenda of this incoming Trump administration?
Hi, Tom. Good morning. Thanks for having me. I think the pickup in the Treasury yields suggests that investors are nervous about the inflationary impacts of Trump's pro-growth policy. And I think, the range of outcome suggests that it's more likely that we'll get some sort of inflation, although it's not certain. But I think we are a bit more cautious on bonds. We currently prefer equities at this stage, and we primarily prefer U.S. equities, actually. We actually upped U.S. equity weightings after the election because it has been a very decisive victory. I think you think about the range of outcome, is more likely that we'll get better growth in the U.S. because of these policies. And whereas for the rest of the world, we turn more cautious, and particularly we reduced our weight in Europe ex-UK equities because of the fact that it has already been suffering from weak growth, and there are going to be more headwinds.
Janet, what assumptions are you making about yields in the US around that bullish call on US equities? Is there a point at which high yields derail that risk-on view around US stocks?
Yes, I think, we understand that the credit spreads currently are very, very tight at the moment. But equally, we have to understand that the U.S. economic situation, heading into 2025 is still very much a healthy state, generally still very resilient. And I think, with this good backdrop and the fact that we're still, under a rate cutting cycle in the Fed, although less than expected, and also with these relatively high conviction of pro-growth measures likely because we have a red sweep. We think that equities likely perform better, and there's not too much risk in the credit market at the moment, even though we understand that the spreads are pretty tight. As long as the economy does okay, we think that the credit side of things looks okay, and that shouldn't be too much of a concern for equity markets.
What was the key factor that led you to cut your exposure to Europe, Janet?
Yeah, first of all, we know that there is U.S. economic exceptionalism that has been a theme for a long time, but this set of policy, pro-growth policy and deregulation likely exacerbate that further. And the fact is we have already seen that European manufacturing PMIs has been in contraction for a long time, and with trade tariffs likely under the backdrop, because trade surplus from the euro area versus the US is like 200 billion. So that is likely to be a prime target. So against this backdrop, I think European equities are likely to suffer. And of course, there is another headwind coming from China as well. Europe is very, very exposed to China as well via trade. So it is kind of a double whammy that we're more cautious of. So again, weighing US versus Europe ex UK, we much prefer the US equities.
OK, potential double whammy for European stocks, cutting that exposure. A quick fire round this morning. We're pressed for time, but we really appreciate it. Janet Murray, thank you very much. As ever, Head of Markets Analysis at RBC Brewin Dolphin with the market views there. To another important corporate story in the European space right now, Nestlé lowering its medium-term profitability target, profitability target and saying that its water business will become a stand-alone company. For more, let's bring in Bloomberg's Dasha Afanasieva, who is in Vevey, Switzerland, at the Nestlé headquarters. Perfect timing, perfect location, of course. Dasha, what else have we learned?
Well, today, the Nestlé chief executive is also going to be announcing 2.5 billion Swiss francs in annual cost cuts. That's on top of previous around 1 billion Swiss francs that had been announced. As you mentioned, profitability in the medium term is expected to be slightly lower, but investors might be heartened by the fact that the company expects sales in the medium term to still grow 4% plus, assuming normal conditions. On top of that, the waters business is going to be headed by the head of the European waters business now, and it does seem like a sale could be on the cards because the company is also exploring partnerships.
Dasha, talk to us about that water business then. What the sale means and what it tells about the longer term strategy of executives at Nestlé.
Well, the water business only represents less than 4% of total revenue, but it has been plagued by problems like contamination, and it is a much lower margin business than Nestlé as a whole. I guess it tells us that the new chief executive, Laurent Freixe, is not afraid to kind of sell stuff off or look at selling stuff off when it's not working. But I think it's noteworthy that other potential businesses that maybe weren't performing so well, such as the frozen foods business, are not for now coming under the chopping block. Or, for example, the ice cream unit that's already a joint venture with PAI. That's also appears to be staying for now.
OK. Dasha Afanasieva, thank you very much indeed. Monitoring what is coming out, of course, of Nestlé on the ground for us as the company, of course, trims its profitability goal and ramps up spending on some of its brands, with the water business as well in focus in terms of a potential sale. Thank you. There's plenty more coming up. Stay with us. This is Bloomberg.
If it was me, I think they could make one more move here in December, and then that would put them at 4 3/8. And then there'll be a debate about where neutral is. But if you thought the median of the committee thinks neutral is maybe 3%, then you have to have maybe 100 basis points on top of that, or 125 even, because inflation isn't all the way back down to target. So normally you would take the inflation difference and then multiply that by 1.25 or 1.5 or something like that. And that's what a Taylor rule would do. That's going to put you right around 4%. So they'd actually be pretty close to where they'd want to be. They'd have another move to make maybe in the first quarter or second quarter. And then after that, it would depend on where inflation went during 2025. So they're in pretty good shape here, I think, for the December meeting.
Jim, maybe for December, but moving beyond that, there's a real question. I haven't heard a lot about long and variable lags in a long time. And basically, there's this feeling that maybe if markets are flying and we have this feeling that businesses are doing just fine, that everything can chug along at these interest rates. And you alluded to it. We could see a higher neutral rate. Just how much have you heard a change in tone from Fed officials over the past couple of weeks?
Yeah, well, they've made 75 basis points of cuts already, so they're not in the same situation that they were in, say, June or July. And I think the growth scare that occurred in sort of the July-August timeframe has dissipated, and now you've got GDP now, Atlanta Fed at 2.5, and the last 2 quarters of growth have been pretty strong, certainly above potential growth rate for the U.S. economy. And so I think, they don't have to go too much further to be at the right rate for this level of inflation and an economy that's, moving along pretty well.
Former St. Louis Fed President James Bullard speaking there on expectations around the Fed's next steps with a view that they could go again in December. To a major corporate story at the moment, again, around Bloomberg's reporting on the focus on Google and Alphabet and the Department of Justice urging a judge in that case, and that detail will come through in April of next year, to compel and force Google to spin off its Chrome browser. Really important in terms of the search part of that business, the driver, of course, of revenues for Google. This is a potential fracturing, then, of the Google ecosystem. It's not the worst case scenario. They're not going to compel them to sell off the Android operating system, but it is a pretty significant step, again, if the judge heeds this recommendation from the DOJ. So we'll see how that company performs, called lower by 1% on the back of that detail. Let's flip the board and have a look on the touch of the consumer when it comes to Walmart, which will be reporting before the markets, and of course the biggest supermarket chain, biggest grocer stateside, so a real touch point engaged on the health of the US consumer, seemingly set to benefit from a move to groceries by the US consumer, and we'll see if that continues. Estimates of growth in terms of same-store sales of 3.8%, so slightly below what you saw in the second quarter, and certainly compared to the third quarter of the previous year, down from the 4.7%, but at 3.8% in an environment of higher interest rates, relative resilience is the expectation from Walmart. We'll get that number, of course, and those numbers dropping before the market opens stateside. Before then, we're going to be speaking with the CBOE Global Markets President of North America and European Equities. Don't miss that conversation, 8:30 a.m. UK time. The opening trade is up next. This is Bloomberg.